yesterday we talked about the market rally that we were seeing with the S&P bouncing from 1291, hitting a fresh high yesterday. So I believe it was a 1 week high, so 1334. But then you can see today it really fell apart and gave up all of yesterday's gains and then some, closing, at 1313, right above 1310, violated this low yesterday. Didn't violate this low here of 1310.50 from what was last Thursday. Today's low was 1310.76. But what I want to focus on is what oil did yesterday, while the S&P 500 was bouncing very nicely. And we know, as we've pointed out many times, that oil tends to lead the market, both higher and lower. And you can see, let's look at a daily for the best example, actually. You can see yesterday, so on Friday, USO, the ETF for oil closed at 34.22. Yesterday it closed at 34.23 after hitting a high of 34.76. So at one point it was up over 1% yesterday, but it actually ended up closing flat. After it's already been downtrending on high volume for the last couple weeks. So it showed you an inability to bounce with the market. It showed you an inability to lead, okay? Unlike the market yesterday, which was able to have its second best day of the month yesterday. And then, so that weakness in oil yesterday was a red flag. Okay, you combine that with the fact that there was a lot of resistance underneath 1335 to 1340 from something like these lows here in February. And even you take it out to this high from January, which was 1333, which what's interesting about 1333.4 or whatever it is that the March 2009 bottom was 666.7-ish, I believe. So if you times that number by 2, you get 1333.4 just about. And you can see that was that high. So 1333 just is a number that's been significant. And you can see you had these lows. You came back up to these lows that were support in February. Now, combine that with what oil was doing yesterday, and you combine that with what I said about the VIX yesterday, which I believe had actually looked quite bullish, because it hadn't moved lower by much for 3 days. Granted, it was down 3 days in a row, but my point was that the range in these 3 days was generally just 21 to 22.50. It was a tight range after a big move higher. And, for whatever reason, it just so happened that the market sold off today, having one of its worst days of the month and, one of the worst days of the year even. So just there's little things you can follow on a day-to-day basis that can give you some tips about the overall general direction of the market on a day-to-day basis. And if you think that doesn't have any effect on penny stocks, you're wrong. I can assure you, people like me, if the big board market is moving lower, I'm just playing puts, and I'm having fun in those options because I just assume the penny market's dead, and because I assume it and other people assume it, therefore it's kind of dead. If you notice, the penny market hasn't been too lively ever since this big move down started happening. Okay, so that's also something to keep in mind. But we did see something today. More constructive signs for the overall market. We saw Apple, and this is going to lead us into our first question perfectly. We saw Apple get above its highs of the last couple weeks, close at its best level on an up day since since May 2nd, so to start the month. Now look at this volume pattern in Apple. We've got, out of the last would have been 8 trading days, we have 5 of them are higher. Apple has not traded higher 5 out of the last 8 trading days in a stretch since late March, early April, when the chart was very bullish. So that's good. That's good that what we're seeing in Apple. And same thing kind of in Chipotle. We have a nice volume pattern recently. We talked about this highest volume on an up move since October when that happened last week. Then we followed that up with the best day of the year for Chipotle yesterday. Okay, so those are good signs for the overall market, because those are 2 key stocks in their respective sectors that have been leaders. And when the generals of the army fall, the soldiers don't know who to turn to. And right now, Apple and Chipotle are emerging as generals, and clearly the soldiers don't know where to turn to, as evidenced by days like today. So maybe, this is a early positive sign that we could be closer to a bottom in the overall market than some in the financial media will lead you to believe. Not saying we are, but maybe not that far away. 1390, 1375 or so. Okay, and this is great because the first question is in regards to drawing uptrending trend lines and downtrending trend lines. That would be something like this versus something we also do is we draw horizontal trend lines to gauge support and resistance channels and whatnot. Okay, but trend lines are important, and the reason they're important, let's see. Anyone in chat, why are trend lines important? What would be your answer? Yes, that's a beautiful answer, what Penny said. Because people follow them. And because people follow them, they act like everything you guys have just mentioned, support and resistance. Builds out future support, builds out future resistance. They help gauge stop losses and profit targets. Those are all correct. They are correct because of what Penny says. What Penny says isn't correct because of what you guys said. What you guys said is correct because of what Penny said. People follow them. They assume they are important, so therefore they are. Right, that's self-fulfilling prophecies. We talk about that all the time. That's what technical analysis is. A bunch of people looking at the same thing, drawing the same conclusion, so therefore it kind of happens. You'll see that sometimes. So that's why trend lines are important, first of all. Okay, now this person says they're having trouble getting a grasp on drawing vertical trend lines. I've been using the bottom of a stock starting an uptrend, and then once it has the first pullback, I use that bottom to connect the lines. Is this the correct way to draw them? Once it breaks this line, is it considered on watch for breaking the uptrend and vice versa for downtrend lines? Okay. When it comes to drawing trend lines, the science behind it that was explained to me is you have to have 3 points that connect. That's the book answer. Okay. Now, the other answer is the more voodoo side, where it's, where you can draw a trend line, there's a trend. Because if you could draw it, then maybe somebody else could draw it, and maybe you guys are both following it. The key is to be drawing the trend line that you can assume most people are paying attention to. Okay? So let's take a stock like Chipotle, for example. You have these 3 lower highs in a row, 3 lower lows. Clear channel you can draw. Now, what I will say is that sometimes you don't have to start at the top, you don't have to start at the bottom. Maybe sometimes it's easier to actually start in the middle, okay, and connect those first 2. And then when you extend it out, you can see that this is definitely a valid trend line in my opinion. What gives it even more credence is the way the stock hugged it after breaking above it, closed just above it, sat on it a little bit, and then boom, you got this great explosion. To me, and anybody else who has confidence in their trading, Chipotle has broken out of its short-term downtrend, and now what will we most likely focus on Chipotle since it's broken out of its short-term downtrend? Yes, support, and just looking farther down the line, since Chipotle broke out of its short-term downtrend, what's in play now? Right, a break of recent highs or a continuation of the long-term uptrend that it's been on. This is why you have to look at stocks, long-term history. And on a stock like Chipotle, you have numerous uptrends. I would say right here, I'm connecting my first two. Now, by the book rule, this might not be considered a valid trend line because it only connects 2 points. To me, though, it is certainly one of the trends, right? And the way I justify that is by how when it came down to it, it clearly hugged right above it, right around it, and then once it really broke below it, it struggled. Okay. But that's not the only place you could draw them. On a long-term basis, I find it easier to draw weekly trend lines. They're more clean. So here's a nice one. Look at that. Got 1, 2, 3, 4 points here. Okay? You even kind of had one on the top possibly. So, trend lines, there's not an exact science to it. The way you're going to validate your trend lines is the market's going to validate them for you. Now, everything we apply on a daily chart, we're going to apply on a chart like a 60-minute chart. Here again, we're looking at Chipotle. You can clearly connect 3 points here. That's legit. Tomorrow, that support's going to be, between 405 and 408. Okay. Let's look on something like a 5-minute chart. Well, Chipotle wasn't very volatile today. Let's go to Apple. Apple's another good example today. So Apple, again, now Apple's tricky. Apple is very tricky because we kind of have fits and starts to this overall downtrend, but we have 2 separate downtrends, maybe even 3 or 4 separate downtrends that went on here, okay, because of this huge move up from 560 to 610 in one day, But so like on something like Apple, again, I'd rather start in the middle. I would choose this point here. I want to start in the middle because it's easier. Now this is more of the exact science, is you're choosing kind of deal. I could put it right here at the top of this at the top of this candle here, or I could go to the top of that candle here. It's just kind of your preference. Personally, I'm going to go to this candle here because that's where 2 closes were. Excuse me, that's where some open and close congestion was, okay, in terms of the daily ranges. The wicks tell me there probably wasn't as much volume that traded at the wick as there was at the top of the body. So I'm going to use the top of there. And now you can see on Apple, we certainly have our 3rd point down here, and we're starting to get a little bit of a breakout, right? Good volume today as well. Now, what's interesting about Apple is depending on where you draw your trend line, this is where it can get tricky, is some people may argue Apple has already broken its downtrend line. Personally, I wouldn't argue that, but I could see where you could make that argument, and that would be this downtrend here. Right? You had 1 point, 2 points, and then you had a third point. It's just instead of it being below it, it touches just above it. Okay? Remember, they said 3 points. I read in a book, one of the few books I've ever read, I think it was called Sticky Icky Stock Charts, maybe? Possibly, Sticky Icky Stock Charts. Not sure. It was a while ago. At any rate, they made a point that, the points have to be 3 valid points that you can connect. Now here, even though it's above it, that was really a fake out. Since it came right back below it, I give credence to this downtrend line as well. So some could argue that based on the volume, based on the price, that it's already broken the major downtrend. But I wouldn't necessarily argue that. And the reason I wouldn't argue that is because this argument, in my opinion, would be based on 2 key higher lows. This one here and this one here at 644 and 620.25. My trend line here is based on a third higher low of 618. Personally, I'm more focused on the third higher low of 618 versus the second higher low of 620.25. Why might that be for someone like me? Why is that my preference? Anybody have any idea? What do you mean as far as time frame? Yeah, so in other words, it's the most recent one. This 618 high is more recent than the 620.25 high. I want to connect the more recent highs, as well as you always have to include the all-time high. I mean, that should go without saying. But again, so if Apple can show us some extension here, maybe get above this congestion here around 583, then that would serve as kind of confirmation for me a breakout of this downtrend. And volume needs to remain strong as well. And again, with a stock like Apple, what's going to come back into play if the short-term downtrend has been broken? The long-term uptrend that is clearly evident. Just a parabolic uptrend. Okay. I mean, Apple's a long way from its uptrend line. It didn't even come down. Again, this is where you can kind of use your subjective analysis and determine where you're going to put your trend lines. Heck, some people might say, here's the downtrend line in Apple. Again, this isn't this isn't my preference, but I could see why somebody might be doing this. Some people might say, here's the short-term downtrend on Apple on the weekly chart. It broke it this week already. The volume is supporting that, so we're good to go. That's where your usage of trend lines can be subjective, and the way you're going to figure out if you're being objective while subjective at the same time, okay, meaning you understand what everybody else is looking at, then that's when you'll see that you're drawing your trend lines in the correct place. If stocks constantly break your trend lines and then move lower or move higher, for instance, if you chart a stock and you chart that it's in a downtrend and it breaks above your downtrend line where you have it and then moves lower the next week to new lows, or you have a chart that you have a stock that you chart and it's in an uptrend on your trend line, and then it breaks below the uptrend but then moves higher 2 weeks later by a good amount, then you are drawing your trend lines in poor places. It's just as simple as that. That's one of the ways you can identify that. If you don't want to wait a couple days to see if you're drawing them in the right place, because obviously you're not going to know that answer until some trading goes on, Draw trend lines on a 60-minute chart. See where you draw them, see how you do. Or a 5-minute chart for the day, see how you do. On Apple, I would put some, right around here. So maybe I'll follow this trend tomorrow and see what happens. If it breaks, does it move lower? That would be a good confirmation of my trend line. If it comes down to it and then bounces off of it, that would be a good confirmation. If it breaks below it and then goes down here and then moves back up to 582, now I have to plot a new trend line. That doesn't mean my trend line is necessarily wrong, because that would be a big move lower. But if it goes from, let's say, you have this low at 574.48, and the trend line low was about 574.65. You've got this low at 570.33, and the trend line low was at 570.68 about. This low at 570.04, trend line low was 570.21. So if your stocks are coming, 20, 30 cents below where your trend line support is, that's okay. Apple did that all day long, and this was clearly a reliable trend. After the first 3 points got established, you've got 1, 2, 3, 4, 5, you got a bunch of them. If you just bought this trend line, you could sell the pops all day long. Especially at the end of the day, you got a nice pop from 574 all the way up to 579. Okay? But don't trade on your trend lines until you've evaluated them and you become confident in your ability to plot trend lines in the correct places. Okay? Any questions on that part? Well, people use other patterns like that because of the same reason people use trend lines. Because people believe that other people are using them, and that's, what people are following. Now, what would be the major difference between the usage of trend lines and the uses of formations like wedges and flags, as far as reliability factor? No guesses? Okay, so we've got no idea. More people follow trend lines, the same, previous movement. Yeah, it's a popularity contest. More people use trend lines, more people follow them. Therefore, voila, more people follow them. Flags and wedges and stuff, yes, they are extended trend lines. They are not as popular amongst, the average trader. So it's really, you can do your own selection. Personally, I think anything you see in a falling wedge or a flag or a trend line, you're going to see in a chart or volume from volume and price action anyway. That's why you guys, as you know now, I'm never necessarily talking about trends first. What do I talk about first? I talk about where was the recent low, where was the recent high, where were some opens, where were some closes, where did the volume trade, okay? Trends and stuff, while I do use that for instances like I just showed on Chipotle and Apple, those are secondary to my primary indicator, which is volume and price action. Why is volume and price action greater to me than a trend line? Because of the same reason a trend line is greater than a falling wedge pattern. More people use volume and price action. The trend lines and those patterns, those are for the people who don't know how to read volume and price action. That's their little thing that they do to make up for the fact that they haven't taken the time to study and analyze volume and price action. Sometimes I laugh at those people because what happens is some of these patterns become so obvious that you think the pattern has to play out. So you ignore the volume and price action. This is what a poor trader would do. And you say, look at this pattern. This is a head and shoulders. This is a falling wedge. This is going to play out regardless of the volume and price action. And that's why I love when I do note technical patterns. If you read my commentaries, you'll notice that I say, I like this because it's not being widely reported. Okay? Or I like this because I like the fact everybody is expecting a bearish head and shoulders pattern because actually the market looks kind of good based on volume and price. I'll give you a quick example. Okay? The Russell 2000 index, charted with IWM here. A lot of people, let's see what you guys think. Does this look like a pattern to anybody? What we're seeing now on the Russell 2000, this is a stretch from March through April. Does that look like any type of technical pattern? Yes. An inverse head and shoulders pattern. That's what I see as well. And I remember this was getting reported very, very heavily. A lot of the media outlets were talking about this bullish inverse head and shoulders pattern in the Russell 2000 index. I did not like that because if you watch the index, the price action actually wasn't that good. It wasn't able to get above this high on this day. It wasn't able to extend past it. Like real estate pointed out, you had a double top here. Then you had a break below lows. Okay, you had some lower highs. It was down 5 out of 6 days in a row. It was down 8 out of 11 days. Okay, 9 out of 12. Just some bearish things were going on. Where if you fell for that pattern instead of paid attention to the volume and price action, you know, the Russell has really taken quite a fall from 840 down to 760. Now, how about this? Does this look like anything here in the Dow Jones? Here, we'll go. This was from January through April. Does that look like a pattern? Yeah, head and shoulders pattern, okay? But if you look at this chart of the Dow, you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Out of those 11 days, 6 of them were green. There wasn't much panic, unlike the Russell 2000. Okay, so the Russell 2000 had a very bullish chart formation with bearish volume and price action. The Dow Jones Industrial Average had a bearish chart pattern with bullish price action and volume. I showed you what the Russell went on to do. And then here you see the Dow Jones went on to just really rip hard, fake all these people out. They were probably buying a breakout, okay? And then up here, now we have a triple top. Triple tops aren't a formation. Triple tops are just 3 highs on a chart, volume and price, okay? And, you know, look how that played out. Betting against the Dow, you screwed yourself up because you would have been right if you would have just allowed the trend to play out, play the volume and price action, and then take your trade later when the risk-reward scenario is more in your favor. So I've spoken with a lot of people I respect in my life in the same field as myself with much more experience than myself, and they all seem to laugh when it comes to these types of patterns. I remember being younger and talking to somebody about a pattern that I'd seen in the S&P 500, and he started laughing at me and he just asked me what I was doing. You know, like what are you doing? What are you following that shit for? Okay. Time for some charts. First one is FCEL. Nice move today. Highest volume on an up day since, late March. And a lot of downtrends. Let's see, did it break above these highs? Nope, got to break above this high, 128. Okay. That high is important to me because it's the most recent high. Above 128, you have a high here of 135. And that actually extends. Yeah. Okay. Now, so we've talked about that on the high side. Now, as far as the low side, we broke above this recent high at 115. So I'd like to see 115 turn into support. Below 115, we're going to be giving up too much of these gains from today. Now, that's my primary focus. And then, like I said, I will use downtrends to help as well. And you can see, to me, it broke this short-term downtrend. Okay. So that's good. Would like to see it keep that. But it's still, just from looking at this chart over the last 120 days, longer term, it seems like it's still in a broader downtrend. Okay, so there's a lot of work that needs to be done to this. I mean, this is just not a good-looking chart at all. At all. Looks like it's probably going to zero. Okay. Now, in addition to the 115 level, we had a lot of volume here at 117, so that's right near our 115 level. The low here was 117, and then 118. So yeah, so 115 to 117 is going to be spot on for where you want to see this thing hold. Okay. And as far as volume, I'd like to see another 3 million to 4 million share day if the price is rising. If it's going to pull back to support, I'd like to see it do so on less than 2.5 million shares. GWBU, nothing to talk about yet. I mean, everything I said last week and earlier this week is still true. It's holding its gains, low supply, low demand, even lower supply, as evidenced by the fact it's holding its gains. It's went below yesterday's low and made a lower high, but it did that as well last week on 3 occasions, and it didn't really impact the price too much. Now, we do have these lows, 137, 142, 144, so we're getting, closer and closer to that 140 level. So 137, in my opinion, remains the key level. If 137 breaks, you could see a further, deeper pullback to the 110 to 125 range. Really, if 137 were to break and it doesn't find support, close by, it wouldn't surprise me to see it fall down towards 90. Personally, I'll be surprised if they let 137 break, but who knows, they might not feel the need to support it. So that would be my stop loss on this trade right now if I was in it or if I initiated it. As far as resistance, same story, 160. Hasn't really been able to stay above 160 with any type of consistency. So until that happens, we're not going to see $2. As far as volume, I want to see, as it goes higher, I'd like to see, a volume day of 10 million shares or so to the upside. But if it's just going to churn here and trade lower, then the less volume, the better. Because that means the slightest uptick in demand will cause a greater move higher. And as long as any uptick in supply doesn't result in a move below 137, this chart will remain very attractive. AGRT. So I'll tell you what don't I like about AGRT. I mean, this should be really obvious. Let's look at it again. Well, I mean, hey, it didn't give up gains. It hit 20 cents. It was at 20 cents yesterday, and it's at 50 today. Yes, volume. Volume is extremely low compared to yesterday. Now, we said it was unfair of us to expect a volume day similar to yesterday, but we also said we wanted to see around 10 million shares. We didn't get anywhere close to that, 2.5 million shares short. Yeah, that's, you say anywhere close, we're only 2.5 million shares off. Well, 2.5 million at 50 cents is $1.5 million. So we were $1.5 million short of what I would have liked to see. Okay. From an intraday basis as well, it did give up gains and it gapped down. So right away on the very second day of the promotion, first day of the promotion when people know what it is the night before, it gapped down. So the first immediate history we have to go off of is it gapped down. So as far as if we're going to play it for a gap, it's going to need to be looking very, very good because it just showed us right away that it can't gap up. I can only judge off of 1 day's worth of price action because that's all I have. Okay? Yes, it gapped up yesterday, but there were no emails sent out the night before, so it makes a big difference. Because remember, we buy gap plays because we assume somebody's going to pump it to their subscriber base that night so that there'll be interest right at the open. Today, the fact it gapped down tells me that there wasn't that much interest from their subscriber base the night when they emailed their ticker out. And you could see that within the first 5 minutes. I mean, volume was pathetic. Now, it did pull back on the amount of volume that we said we'd like to see it be less than in order for it to remain bullish. And it held the key level that we said overall, which was 40 cents. We said, go back and watch the video last night. We said if it's going to move lower at the open, we want less than 1 million shares within the first 5 minutes, and we want to see it hold 40 because that was resistance in the morning, and that's exactly what happened. And as a result, you got a bounce. Nice bounce. But volume was very, very, very low. And it downtrended throughout the day, closed on its lows for the day, gave up these gains as somebody pointed out in chat, can't remember who, and then you had a low at 52, lower low at 51.1, and then another low going into the close at 51.5, close to this lower low as well. So momentum fading into the close. The key support is going to be, today's open of what was 48, and below that, the low of 40 cents. Below 40 cents, this thing's done, in my opinion. Maybe I'd be wrong, but I'd be very impressed if they got it back after it broke 40 cents. As for resistance, 60 cents, it really kind of crapped out. Couldn't stay above it. So just like GWBU needs to break 160, AGRT needs to stay above 60 with some consistency to show us that it has the potential to get towards 75 cents and $1. Overall, though, in my opinion, they did a fantastic job on this peg. I mean, 18 cents to 66 cents in 2 days. You allowed for 5 million shares to trade between 15 and 35, so a ton of people should have made money on this. Then you allowed 2.5 between 30 and 37. So over about 8 million shares were able to be had under 38. This thing hit 66 cents today. All these people who bought yesterday at the open made, 100% in some cases. And, if they didn't make 100, they still made 60, which is great. So anybody who after this thing, if it were to fall and crash tomorrow, anybody who says, oh, that was a bad pick, blah, blah, I would disagree very strongly with you about that. I think this has been a great pick regardless of what it does from this point on. GYSTD. Interesting. So, looks like a reverse split. Anytime you have a huge drop here, it never traded those shares up there. They were just reverse split down, just like AGRT. Okay. So you just kind of got to follow it. This is very, very suspicious. I like this chart because it's volume out of nowhere. Now, what will likely happen though is nothing until the D comes off. D, for those of you who don't know, means deregistered with the SEC. It means they're not. It means they don't have filings, or something's going on. They're waiting on a filing. They're delisted. Okay. So, you just got to watch this one. There's nothing we can really say other than nice strong buying into the close. That's interesting. Let's look at the time and sales here and see how big the blocks were. $150,000, $150,000, $150,000. It's only, $12,000 or so. $89,000. Another 150,000 share block. 205,000, 150, 105,000. All right, this is interesting, definitely. Some legit volume. Definitely one to keep an eye on. We just got to watch this. I mean, until we see more history, we can't make any assumptions. But the volume was nice, so this will definitely be getting added to my suspicious activity list. Whoever found it, wherever you found it, remember where you found it, if this does well. SYNC, sick move. Highest volume on an updated day since, early May when this promotion began. 3 up days in a row, first time that's happened since early May when the promotion began. 5 out of 6 up days in a row, 6 out of 8 up days in a row. All great stuff going on. Broke above this high at 1360. Excuse me. Broke above this base. So this is really the key base. This $12 to $13 range. Okay? Now, let's see. We've got a higher low 1, 2, 3, 4, 5, 6, 7 days in a row. And we have a higher high 5, 6 days in a row. So we want to keep seeing those as for the immediate trend. Let's look at the 5-minute chart, see where the volume was today. Nice breakout into the close. This is nice, okay? And why is this nice to see here, this high volume into the close? Why do we like seeing that? Right, a lot of demand at the close. What can we assume for the next morning? Yeah, continuation, gap, all those things. Why wouldn't that demand that came in at the end of the day, why isn't it going to be there the first 5 minutes of the day tomorrow if it was there the last 5 minutes of the day today? That would be my question, and I would be watching very closely tomorrow to see my answer. So these highs here around 1340, 1350, that's your first immediate support. If we break it down even further, so 1340, 1350, that's the support above that $13 range. Below 13, really for the overall trend, as long as it holds 12, it looks great. Now, your next resistance is just going to be, psychological, $14.50, $14.75, $15, so on and so forth. Within the first 5 minutes today, tomorrow, if it trades more than 60,000 shares as the price is increasing, that'd be a very bullish sign to me. If it pulls back to support, I'd like to see it do so on less than 80,000 shares in the first 15 minutes. GWBU's on here twice. Oh, and let me say, just to this person, they'll know who they are. There was a chart that was requested tonight that isn't on this list, and that's because I have a potential conflict of interest in reviewing it, so I simply did not feel comfortable reviewing it at this time. So I apologize to that person, and yeah, sorry you won't get to hear my opinion. Last one, BRFH. Nice action into the close today. Ooh, but a red day. High volume day, same price range 2 days in a row. So I'd be a little cautious. What don't we like? Or maybe you do like it. I don't know. I don't like it, but you might. What are some of the things we could say about back-to-back days like this? High volume, same price range 2 days in a row. Just what are some of the observations we could make? Out of those two, the ones I like the best are dilution and indecision, which is the same as equal supply and demand. As far as strength, I don't know. I can't really say it's strength because its high was 114, then it was 118, then it was 116, and it can't close over this 114 high. It doesn't seem like it seems to struggle with that. So I'd like to see it be able to do that before I'm going to get ready to call it strength. Dilution, obviously, volume out of nowhere. Where can all this volume be coming from after, this is more volume in the last 2 days combined than it was the entire campaign. So where is this outside volume coming from? Well, the company or the promoters or the financiers behind the promotion. Okay. The problem with the equal supply and demand is indecision, which means an uptick in supply could, send this back below $1. This is a good range for day traders, but okay, the other thing I notice, a lot of volume at the open, gaps up. A lot of volume at the open, sells off. Gaps up and sells off. A lot of volume at the open today, gaps up and sells off. Did recover, though, nicely into the close. And actually, from looking at this, it looks like it closed at 116. So let's check stock charts very quickly, since we know E-Trade can be a POS sometimes. Okay, so it did close at 116. So that's good. That's much better. Okay, so I guess you can say it's strong. It was able to claim that level. However, there still is some indecision by the fact the range was the same on back-to-back days on volume. But now, since it did close up there, the statement that the dips are being bought is true to me, okay? But still, you got to be careful because of the ranges the last 2 days. Resistance is 120 psychologically. Above that, 125, and then you could potentially target that 135 to 150 range. As for support, I'd like to see it turn 111. It didn't go below it all afternoon, so let's keep doing that. Below 111, I could see a retest of the $1 level. Based on the 15-minute chart that I see, I would say yes, it will gap tomorrow. I like the highest volume at the end of the day, last 15 minutes since the opening. So that, I expect there to be some decent demand at the open tomorrow. If it's going to gap and run, it's going to trade greater than 120,000 shares within the first 15 minutes, greater than 100. Geez, so it traded all that volume in the first 5 minutes today. So greater than 100,000 shares at least within the first 5 minutes. The more, the better. Okay, guys, That's it. No, GWBU did not show me signs that it was going to get.